Hey guys, welcome back. Hope you're having a great weekend. I'm coming to you from Newport, Rhode Island, and I wanted to get this video out because I was looking through the comments in our last couple of videos. And guys, I am still a bit shocked about how many people in this community and just how many investors in general just haven't shifted their thinking on the memory sector. They still continue to view this sector through the traditional lens of a boom bust cycle like we saw in the past when memory was provided to consumer devices, whether that be smartphones, PCs, or other consumer related devices. And they haven't shifted to believe or to realize that AI has fundamentally changed the memory sector. We are no longer in the same type of boom bust cycle that we saw in the past. The sector has been completely changed by AI. And that's what I want to go through today. I want to show you some signals from top leaders in the industry that are just reinforcing that fact that we are going to see a constrained 2027 and demand continue to outstrip supply all the way to the end of this decade. And then I want to show you some real hurdles that we see in the market because this market is growing so exponentially. Just the AI build out. Can the market actually keep up? We're seeing local and political backlash against data centers. We're seeing real concerns with financing, with the amount of capital the hyperscalers will need for this AI infrastructure build out. So let's go through those two real concerns in the market because those aren't just opinions or speculative plays. Those are real things that are happening right now. And those are real challenges for the memory sector, in my opinion. But guys, the demand is insatiable right now in the market. And if you're sitting there and you're thinking, I just don't believe it. The memory sector has always been a boom bust. You have to drop that historical context. You have to get rid of that old thinking. This is a different sector. These companies are valued differently. They operate differently. The demand for them is different than it ever has been because of AI. And that's exactly what I want to walk through in this video together. And I encourage you to drop your comments, share your thoughts. Let's have a debate on it at the end. But if you haven't done it already, make sure you hit like. Make sure you subscribe to the channel. Let's keep growing Market Signal together. Let's get to 50,000 subscribers. Let's get beyond. But if you like this content, if you've watched this channel before and you haven't subscribed, because my data shows me about 50% of our viewers haven't subscribed to the channel, do me a favor, just subscribe now. It's free. It takes a second, and you can get this content each and every day that I put it out. And let's get started. Let's take a look at what we're seeing in the marketplace right now. I want to go through a couple things real quick. I just want to show you some signals that we're seeing from key analysts first, and then we'll get into the executives from the companies. So this came out yesterday. It's from Dan Ives, who's very well entrenched in this sector, and he's bullish on memory stocks. He says, it is their world and everyone else is paying rent, is his quote. Basically, he says that the AI revolution, the ratio of demand to supply for memory is around 15-1. He said everyone else, it's their world and everyone else is paying rent. He says there will be ebbs and flows, but the multi-year cycle is going to continue to play out. He's not concerned about the Chinese players and their competition in the space. And he does say that he's not concerned also about companies over-ordering or inventory changing. He's not worried about that at all right now. He's completely bullish on this cycle right now. Memory, like he says, it is their world and everyone else is paying rent. We're also seeing analysts from Evercore. They give 6 hardware stocks that you have to own for the rest of the year. 2 of those 6 are the storage kings. They're Western Digital and they're Seagate. He goes through the reasons. He said that the storage makers and network providers have provided investors with significant money this year so far, but they are poised to continue that trend into the second half of 2026. The strength in demand for hardware disk drives has the team at Evercore enthusiastic about the future upside in the shares of Seagate as well as Western Digital. So those are another clear sign. We're seeing the signs and the signals from all the analysts around the HBM players, the advanced DRAM. So that's Micron, SK Hynix, as well as NAND with SanDisk. But we're seeing it now with the HDD players as well, calling out the importance of Western Digital and Seagate and how they can potentially just return value for shareholders in the second half of this year. But let me show you what the executives are saying around the marketplace. Let's start with SK Hynix. We saw their $29 billion buyback, which definitely exploded their share. But now their chairman is continuing to go on and talk about the memory shortage that we'll see next year and how it is going to be more constrained than ever. And he ties this expansion to long-term orders. So he goes on in the first sentence here. You see that memory demand is surging explosively and that the most severe memory shortage will hit in 2027. He actually apologized for the pace of the memory chip price increases and the impact that it's having across the entire industry as part of this interview. But I love this piece when he says that to balance the supply and demand and to avoid the blind expansion cycle that could trigger severe overcapacity, SK Hynix has set out a $72 billion expansion plan that is aimed at doubling capacity over the next 5 years. But here's the kicker with it. The chairman said that all fab investments, they are tied to long-term customer orders, and they will not be built without demand backing them. So that's a strong sign for us that we're not just going to have this oversupply glut in the marketplace like we saw back in 2023 that'll just drive prices down. Demand is being built, or supply is being built based on contractual agreements and key demand from suppliers in the marketplace. They also have two kind of new risk-sharing models that they're discussing. It's a joint venture with customers. The first one, joint venture with customers to build fabs together. And then secondly, was memory as a service, very similar to what we saw with software. But the chairman is going on to say that the memory as a service model will let customers lease memory resources based on demand instead of buying chips outright, which would ease the massive CapEx in the market. The last piece over here is just around the questions came to him. Should investors worry about the aggressive expansion? And could we repeat the memory industry's historical boom bust cycle? Chairman drew a sharp distinction between the old market logic and today's demand environment. He said that the chip supply is unlikely to keep pace with explosive demand until humanity reaches AGI, and that the shortage could last through 2030. So that's a clear signal of just how constrained the market will be from a leader who is, remember, SK Hynix is clearly the leader in HBM. They bought a 50 share, maybe even a little bit more. So this gentleman and the chairman here knows exactly the dynamics that is happening in the marketplace right now. And if we jump over to Samsung, the clear leader across all memory, Samsung, they did finalize that what we were speculating the other day around the share buyback. They were not going to let SK Hynix outdo them. So Samsung is going to hand back $79 billion to investors this year. So the board approved it. It's the largest ever for a Korean firm. It's 5 times bigger than Samsung's previous record, and it'll be done in 2 different phases. So initially, about $21.5 billion will be paid as in dividends in the 3rd quarter of this year. And then the remainder of that $79 billion will be a mix of cash dividends and share buybacks and cancellations. So this sits under Samsung's kind of shareholder return policy, where they want to return 50% of free cash flow to their shareholders overall. That is going to drive the share price. It's also just a strong sign of conviction and confidence from Samsung to the investors and to the sector that they believe that demand is going to continue to outstrip supply and that pricing will stay stable. They'll continue to have pricing power throughout the next couple years, and even probably honestly could be out through the end of the decade. And then finally, the last one, let's hear from Micron, because you saw the interview. I saw so many comments on the channel, the interview that the Micron CEO had with Jim Cramer. This was a key quote right in the title, that AI has totally changed the equation for the boom bust memory industry. So many strong signals in this interview. Let's just go through a few. He said there is no AI without memory. AI systems need more memory. They need higher performance memory. They need low power memory. And he said, so the value of memory, that equation, it has totally changed in the marketplace. And that's what I was the point I was making in my opening, that we have AI has fundamentally changed this sector. It has changed the dynamics of memory. And if you're still sitting there thinking that this has to be a boom bust, we've seen it historically all the time. They build up supply, prices drop. Guys, I'm telling you that the dynamics have changed. At least it will stay changed throughout 2028. These industry leaders think it'll stay this way through 2030 overall. But let's go through a couple more quotes. He says that AI is creating a more durable source of demand. The opportunity extends beyond data centers. He's mentioning that it's going to move into autonomous vehicles, robots, AI-enabled consumer devices, so edge overall, and it's going to require increasingly large amounts of memory in the years ahead. And that's why he calls memory a strategic infrastructure of the AI era. We scroll down. He said they're working more closely. So this is more of a customer sentiment, just to give you kind of an inside look of how he's working with his customers and what their perception is and how it's changed. They're working more closely than they ever have and more earlier than they ever have with their customers. It's a true partnership. He's saying the customers recognize the value of memory. All customers across our end markets will buy everything we make. And he said that the data center customers currently want 50% more supply than Micron can actually commit to today. So we are committed to taking that. They are committed to taking the supply. And this gives Micron and it gives all memory providers the assurance of demand that we see in the marketplace. So there you heard it from all three of the big three leaders on what they're doing, just giving signs of confidence in this sector, signs that demand will continue to outstrip supply years ahead, maybe even to the end of the decade overall. Let me show you why it's changed, why it has changed, in my opinion. So let's take a look at the old cycle versus the new contract architecture. In the past, you may be sitting there still thinking that memory has to be a boom and bust. I would tell you that you're on the left side of the screen. Your thinking is an old memory, is a commodity cycle where we see spot heavy purchasing, short visibility, speculative capacity, price competition, and inventory corrections where we have boom, bust, and repeat. The new marketplace and how AI has changed it is on the right. AI memory, it's a strategic contract architecture. You no longer have spot market pricing. You have multi-year strategic agreements between the hyperscalers and the memory providers. You have upfront cash deposits, strong revenue visibility for years to come. Minimum commitments overall. So shared upside, shared downside for the players in this space. Co-design memory, they're designing it years in advance together. And then finally, longer capacity planning. Visibility is out for years overall. So this doesn't, in my opinion, I would say, listen, it doesn't completely eliminate all the cyclicality in memory, but it potentially changes the amplitude of the cycle. If customers commit minimum volumes and minimal pricing years in advance, suppliers gain something that they historically have lacked. They gain visibility to the downside. And it also means who absorbs the risk is ultimately changed in the end. So with the contracts in place, we're seeing risk shift from memory from when we get to a turn or a downside. That risk is shifting completely from memory to the hyperscalers as well, because they will absorb that risk with these new contracts overall. So this is why, in my opinion, we're seeing a complete shift. The signals from the marketplace, but also the dynamics in the memory sector when we move from kind of the old cycle to the new contract architecture. But let's talk about real concerns and real risks that we see. And there's two of them that I want to talk about. One is the backlash we're seeing against data centers. It is a political powder keg right now. No question about it. No matter what side of the aisle you're on, whether if you're on the right or the left, there is opposition against data centers, and it's opposition against political leaders that have been supportive of data centers in the past. And that's exactly what this Wall Street Journal article goes through. They talk about politicians who once championed data centers are now shifting their sentiment. They're starting to take steps to slow down the growth and the rollout of the data centers. And we're seeing it both. The article calls out Greg Abbott in Texas and Josh Shapiro in Pennsylvania, and how they're taking steps to slow down the development of those facilities. As anger over AI spreads, but it's also because of political backlash from some opposition that they're facing. Their political opponents or the opponents to their political party are making steps against them, or making kind of campaigns against them in their support of data centers, and kind of really tapping into this sentiment we see in the public right now. But you can see in November, Abbott declared his state of Texas would be the epicenter of AI development and announced a $40 billion investment in Google. Less than a year later, we're seeing the Republicans say that he's halted the approvals or slow down the approvals of some 1,800 new data centers worth billions of dollars on concerns that they use too much power and water. Ultimately, it comes down to this growing voter outcry over data centers that strain resources and fuel technology capable of putting Americans out of work is becoming the mounting liability for Republicans and some Democrats in the fall elections. The biggest concern that I believe for data centers is this fear that it's going to put people out of work. We clearly saw two of the biggest leaders in Dario and Sam Altman from Anthropic and OpenAI in the beginning and say that AI is going to take everyone's jobs. Now we've reached this period, and the jobs, what we're actually seeing a different trend in the marketplace. We're not seeing massive job losses. We're actually seeing jobs increase in certain sectors that are related to AI, but we haven't seen these leaders come out and make any corrections to their statements they put out. I think that's there's a missed opportunity for them to reframe AI overall, correct some of the statements they put in to lower some of the public outcry, some of the concerns that we see in the public, because it is reaching a ultimate level right now and is becoming a massive political talking point. We're seeing whether it's Michigan, whether it's Ohio, it's the same topic that data centers are becoming a point of conflict. Here's the key stat from the University of Pennsylvania that more than 60% of Americans oppose new data centers in their area, and it's up from 49% in March. So the sentiment is growing stronger overall. And we are seeing a ton of leaders, just be put on the hot seat for their support. So this is a key concern in the marketplace. It's the backlash that we see from Americans. My question will be, where does it go? Does this slow down the growth of data centers? If so, that'll have an impact on the AI build out, which ultimately will have an impact on the memory sector. So we very well have to keep our eye on this, but it's clear this is becoming a massive political backlash or political sentiment against data centers, and there needs to be more reframings from some of the leaders around the importance of these data centers. The other piece that I want to talk about is just the fact around the financing that we see, because this article is both bearish and bullish, I would say, for the sector. It's in Barron's today. It talks about AI spending boom is outrunning Wall Street's estimates. If we go down, it says billions of dollars are pouring into the AI build out. It's racing ahead of Wall Street's forecasts and leaving analysts playing catch up. Capital expenditures for the hyperscalers are being revised upward at a historic rate. We scroll down into the article itself. It says the hyperscalers collectively spent $330 billion in the first half of 2026, and the analysts estimate another $469 billion is being spent in the second half of this year. The pace of spending is only expected to pick up next year, with analysts now estimating that more than $1 trillion of capital expenditure across the major data center operators. The question we have, or the concerns that's being raised in the market, is this amount of financing, this amount of capital that is needed to build this out. Will it dry up? Will it be difficult for the hyperscalers to get the level of financing they need to continue to build out? And if so, that slowdown will significantly have an impact on the memory sector. It'll have an impact on the tech sector overall, any stock related to the data center build out. So that is the concern, is the pace that we are running at, the pace that is needed to meet the demand and to meet this build out that they are trying to reach, is a significant amount of capital that they're going to have to tap into. So it's estimated right now that Google's fiscal 2027 CapEx estimate has climbed from $82 billion to $301 billion, a 266% increase. Oracle has risen 262%, Meta 162%, Amazon 147%, and Microsoft 78%. You can see based on the graphs here, is showing a 2027 estimate versus the 26, as well as the historical range and historical median. Just significant jumps for Google, Oracle, Meta as well. I mean, Amazon, probably you could say Microsoft is less, but Google is clearly leading the way with their spending and their commitment overall to the data center build out. So even with major revisions to their initial estimates, experts expect that analysts are likely still underestimating the future of AI spending. Goldman says it is too conservative. It's significantly going to be higher. We also see other analysts are saying this is laughably low, that it's going to be a significantly higher number in 2027 that we see right now. Where is the bullish part of this? It's basically saying this right here in this paragraph that's highlighted, that companies that supply the hyperscalers will continue to benefit from their massive infrastructure build out. Beyond retail favorites like NVIDIA and AMD, less familiar segments such as data center infrastructure and networking equipment companies, they generate a significant share of their revenue from hyperscaler spending. The graph calls out here these 5 players that they say are poised to cash in on the CapEx. You've got Seagate, Western Digital, Vertiv, Arista, and CoreWeave. We know there'll be other players as well, but the article just calls this out. And they're mentioning it since the start of the year. These 5 high exposure companies have had an average return of 100% compared to the negative 3.6 average return from the 5 hyperscalers. So experts say that the dynamic is likely to continue over the coming years as big tech continues to pour money into the AI build out. And while hyperscalers may capture the headlines, the bigger investment story could be unfolding among the companies building the infrastructure behind the estimated $1 trillion in annual spending, a figure no doubt that has room to grow because many feel it is just underreported and underestimated. So that is a bearish kind of and bullish. I'm concerned about just where the money is going to come from overall, and will they be able to achieve and get all of the financing that is needed to build out the data centers. But guys, if they can, it is a massive bullish sign for the memory sector and all the stocks that are related, all the companies that are related to the build out. So guys, in closing, I hope you see it the same way I do, that demand is significantly outstripping supply. And honestly, we have shifted into a new AI memory cycle. AI has completely shifted the dynamics of the memory sector. You heard from leaders in SK Hynix, Samsung, and Micron talking about those dynamics changing overall, talking about how they're working closer with their customers than ever before, and how customers are valuing memory today significantly more than they ever have in the past. And there would be no AI without memory, according to the Micron CEO. Now, there are hurdles in the marketplace. We talked about a couple of them. I'm sure there's many more we could cover, and you could drop them in the comments below. But if we continue to see backlash against data centers build out, the data center build out, if we continue to see concerns around the capital spending and where we can get that financing from, and does that financing slow down? Either of those, if either of those factors cause a slowdown, it will have an impact on the memory sector. It'll have an impact on the entire tech sector that is related to this AI infrastructure build out. But let me know your thoughts below. What is your position today? Does any of the data I share with you, does it build more conviction? Does it build more concern overall? Let me know your thoughts about Micron. What do you think we'll see when the opening bell rings on Monday? Will we gap up? Will we continue to see momentum moving this stock in the right direction? Or will we have another pullback? Will we face another hurdle with this memory sector? Because it seems like we are always continuing to advance and then face a hurdle, advance and face a hurdle. So will we have that again next week, or will it be a strong week across the board? Hope you guys are having a great day. Let me know your thoughts below, and I'll see you on the next one.